What up traders, what up investors, Ken here from the Dyslexic Investor, and what we're going to be doing today is basically going through my chart setup here within thinkorswim. I'm going to give you some notes that you're able to take down if you want to kind of import this into your own system. The link down below actually just takes you to the thinkorswim client to be able to upload it, so these charts will just magically appear within your client. Again, this is thinkorswim, is the platform that I use here for charting, which you see me talking about all this all the time, and this is via my TD Ameritrade account on top of my options account, which is Tastyworks, which I love for options. That's mostly where all my options trade go into. So that being said, looking at the chart, we're just going to go through basically a handful of these charts. We're going into, a lot of them are basically the same. Basically all the moving averages usually stay the same across all the platforms, or across all the different charts. Basically the one you probably see me use the most is between the standard deviations and then this one and then this, and a combination of looking at different time frames. So I'm going to be doing a live stream in the next coming day or two regarding just questions about why is the sky blue, what are options, what understanding, a little more detailed on some of the trades that people do, some of the more crazier trades that we have seen in the past, but particularly with the Wall Street bet side of things. Like, that's why it's such a shiny, glowing light for me, because I'm pretty conservative in my trading and my investing. But then seeing individuals dumping 50, 60, sometimes 100K into a single position that's expiring the following day is I think outright gambling and just crazy psychopaths over there at Wall Street Bets, which they'll be proud of that. Okay, that being said, so we're just going to go through the basic moving averages that I use, and the best way to probably show that is just to look on the overall studies that I use. So there's going to be a lot of mumbo jumbo on here. So basically, we're just going to go through these are all moving average, but they're not the simple, they're the exponential. So it's going to be the 200, 89, 55, 34, 21, 8, and 5. And you can color them whatever color that you want. That being said, those are the moving averages that I use. And you see me flip between multiple of these charts. They're all the basic moving averages within those. This is a different time frame. And I always start out with, normally the trades that I do are usually a swing trade. I do very little day trades or intraday trades, but mine a little bit more long term, like over 3 or 4 weeks for my options. And then for my investings, that could be years, like when we bought this bottom down here in Disney and stuff like that, buying stock at Disney for like $87 or whatever it was, like $90. Like, it was, that's already coming back. That's traded well over $100, I believe, today. What did it trade at? Where is Disney? At 106. So that we're already making money off those stocks that we bought. So again, the daily chart is basically my keystone pivot point where I always look at a chart. So I flip through a lot of charts on a daily basis, and once I can just flip through multiple charts just going down a list. So if I just go on my little list here, I can just go down and each chart will load for me, and it just kind of gives me a great little overview if I want to even dive further into the chart, go into more depth, whatever. This just gives me a quick overview, and the colors work for my eyes. They're very pretty for my eyes. So I do make the 8 and the 21 a little bit thicker, because those are a lot of the momentum moving averages that I like to see and use. So that being said, again, daily is the key pivot point, but then I normally will switch to like the weekly, and then kind of give me, these are more for like the longer term side of things, and this could be investing, with stocks or options, because you can buy leaps and things like that within the options market. But that being said, if you're looking at just the basic layout, some people like to look at the hourly charts, but if you look at the technical side of things, a lot of things do line up, even on the 1 minute chart to the monthly chart, like the patterns always kind of come forth and kind of repeat. I just don't have the what's it called, the steel armor to do day trades, and I kind of I'm a little bit, again, conservative, so I'm not really throwing, again, the $50,000 at one position to hopefully turn it into 52 or things like that. I like to have my thing slowly mature, and I like to see being right pretty fast. I don't like to see a lot of red in my account. I don't like to lose money. So that's one of my key points too, is not losing money and just being able to come back the following day to continue doing what I love, which is investing and trading. So between the charts, this is again the first one we looked at, and again this will be in the description down below. It's actually, I want to be linking this one here. Basically same moving averages, but we're looking at here is going to be some more, a little bit more volume and momentum indicators. So a lot of people understand this momentum indicator, and this is just basically following a lot of the moving averages and then volume. And this down here is the Ttm Squeeze. This is by a gentleman named John Carter. Nice guy, really down-to-earth dude from Texas. Him and his guys developed this. This is basically when the Bollinger Bands contract into the Keltner channel. These little green dots turn red, and that is what it creates the squeeze, and potentially meaning when the Bollinger Bands come into the Keltner channel, meaning there could be a lot of consolidation and the stock could pop up or down. On top of using the other indicators, you can dictate with probability on where it would go. That's a trading strategy behind that. RSI, this is the relatively strength index. This usually, people use this if they're oversold or overbought. So if, let's say, the RSI is at 75 or 80, that means that the stock in retrospect is considered overbought. So it's just it's highly priced and you shouldn't jump in. And then it's on the flip side, if it's below 20 on my charts, some people use 70 and 30, I use 20 and 80. So if it hits 20, it normally, again, with other indicators on top of it, no one has a crystal ball, means it's oversold, so it's due for a kick up. And you got that false reading here at the end of February when the market went down 15% there within like a week, and we had a little bounce, and they continue to cut lower. So if a lot of people did buy this on that indicator alone, but that indicator alone didn't prove anything because the moving averages were still pointing down even 2 or 3 days later. So just a combination of using the indicators. It's not just one indicator can tell you where the market's going to go, or what it could project. Again, no one has a crystal ball, so using multiple indicators and multiple understandings and patterns to kind of build it together and build up a thesis of where it might go, or what you're willing to risk for the trade, the options, or whatever. So that's basically that. Oh, I'm sorry. Then the Chicken Money Flow, that is also a free one that you can see on a lot of different trading platforms. And so this basically follows the money flow. So Chaikin is also another gentleman, and his crew created a market indicator to kind of show the momentum of funds and investors buying into the whatever stock or equity that you're looking at. So higher the number, more people are behind it and buying it. Lower the number, the more people are dumping in. I don't use it as much as I used to. I still just like to have it on there just to kind of give me a little bit of a guidance. This is just basically on a weekly chart. This one is I paid for, so I can't really show too much of that, but I can explain it in a later video. So this is basically what I was talking about, what the squeeze is. So when you see this, so this is the Keltner channels, or the blue teal lines. So when the Bollinger Bands contract in, these dots turn red. So it turns red, so it's going to mean like, oh, the stock's going to pop. and then it did, and went to the upside. So bada bing, bada bang. We had a small squeeze here, but it popped to the downside. So it just means a lot of energy is just cooped up and wants to explode out, but it doesn't know which way it goes. So it's a great little indicator. I really love it. Like, it's a key part of what I do for trading for long-term and short-term, because it works on basically any time frame. So then next is going to be the one you see quite a bit, and this is a combination of the standard deviations. And this is pretty easy to do too. So this is just modified Keltner channels. And of course we have the 1, 2, and 3. So that's the 1, 2, and 3 deviations from the 21 exponential or simple moving average. And you can see that, I should change the color on this one. I always want this to be the same. Let's do that. So you can see the difference between the simple and then the exponential. So this on the chart is what I like to look at, meaning if the purple is cutting into the 21, potentially could tell a slight change a couple days ahead of a potential move incoming. So this kind of happened here. It's the opposite. If the purple crosses into the white, that means it's most likely going to go down. And the reason I wasn't too bullish all the way until here was when this got line crossed here on top of other indicators. The Ttm Squeeze started turning yellow, started going to the upside. Volume came in, it was actually more green. It wasn't crazy double-digit average volumes, which you see down here. So this is just the average volume for the index. So you can see on super high volatile days that we're having 4, 6, 7 times the average at times of volume in that stock or indice. And you can see on such the amount of volatility that the way the SPY, came out of the 3 deviation really strong. And it's very rare for a huge index like SPY to come out of its Bollinger or out of its deviation patterns, because you kind of see here. Let's go on a longer time frame. Let's do like weekly over 20 years. All right. So you can see here, though, this was where is 18? All right. So we had that crazy run in 18 where we're crazy up, but then the Fed kind of flipped the switch and we kind of went down. All right. And we kind of went down, and then we had that horrible 18 into 19 where we had the Fed talking about raising interest rates. People really flipped out. And you can see here that it never really, it did break a couple days. Again, this is on a weekly chart. It broke a couple times, but once it broke out of the 3 deviations channel, that thing snapped right back. It snapped right back like a rubber band. And this is basically when it gets out of the 3 deviation channel, it needs to come back at some point. It's going to be difficult. Like, for example, if a lot of people remember 2017, that was a Hello Kitty of a bullish monster run, with all the different tax deductions to corporations and corporations buying hand over fist their own stock back and everything. And you can kind of see here just these huge price increases and just the momentum's just so much higher. And then once it got out way too far, it just had a snapback, and then it continued to trade in and around that zone until a couple other things. But this previous one is just crazy. We're looking like we're going to break out of the 3rd deviation to the upside, but that whole just about face, put it in reverse, slam that e-brake, and spin it around, just came the complete other direction, pulling way far out from this deviation channel, the 3rd deviation channel. But again, look, we're snapping back. Like, I'm looking for like 229 to 300 for SPY before even thinking about shorting it again. Like, that's not even on my radar. Like, this is super key important levels that we need to meet before anything you start jumping in and shorting. So that's basically my overall breakdown of my charts. Again, like I said, I want to be doing a live stream and I can get more questions and I can field them. I can consolidate some of the questions down and make a nice video and do an FAQ or whatever like that. I just want to help people understand the way my brain works and how I look at the market, how I pick things, how do I choose what to short, what to go long, what to do options, what to trade investments for, and things like that, and give advice in the sense of what I would do. I can't give advice because I'm not a financial advisor or certified financial planner or anything like that. These are just my opinions, so take it or leave it in that sense. But I just want to have people get engaged into the markets, and be excited as much as I am about the overall stock markets and the fun stuff that can come from it. Guys and ladies, thank you so much for watching. This is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.